Hey guys, welcome back to the channel. In the previous video, I talked about Tejori Finance, which is an interesting app to do a lot of research. I want to continue using that and give a demo of the app and also talk about two very interesting sectors which I'm tracking. The first is the banking sector and second is the life insurance sector. So let's get started towards it. Now, how I have done this is you go to sector research and you can select a sector, for example, banking, or you can select, let's say coal or whatever. I'm going to stick to banking for this conversation and also look at life insurance towards that. Now, what they have done is, I think, as I talked in the previous video, they have created certain indexes, which are bank indexes, general insurance, life insurance, private bank, and public bank. So I'm going to remove the insurance pieces here and have only bank. So private bank, public bank, and banks in general. I'm pretty sure there's some sort of an overlap across, but let's see. So bank has certain weights. Public banks would be Canara Bank, SBI, IDBI, and private bank would be Axis, Yes, etc. All right, HDFC. And I think the banks is more of a consolidation of both of them. So what they have done is they have created an index and they are trying to showcase how the index has performed over a certain period of time. Now, if we probably I'll want to study, let's say banks first and not have the separation between, private and public. So this index is was showing certain dip, but now it seems to be on the rise. And when you add private and public, you can see that public banks are kind of on a better rise than private bank, but I think private banks are also catching up. This index is more like, to me, in my view, this is more like a proprietary thing which is they have created. I'm not very quickly able to understand how to use this because it's like Nifty 50 or Bank Nifty, but they have done their own analysis and created this. But when they're showing it in terms of percentage, it's not making sense to me. If they have really done some sort of a single index, it would have been good. But what I can definitely infer is the public bank category in general has is going up, and private bank categories seems to be consolidating in this space. Probably we should just look at 1 year time and it will make more sense. Yeah. Now, if you go to market share, this is where I have very interesting thoughts. So we are gonna do ICICI and HDFC and look at certain parameters, which is let's just try to understand how is UPI working. And so in UPI, they have Phone Pay, Google Pay, Cred, which is very low. And what else is there? They have Beam, which is further low. So Phone Pay seems to be doing really good from a UPI transaction perspective. If you go to internet banking, I think they have a very clear winner. In ICICI Bank, SBI, and HDFC are lagging behind. If you see bank advances and deposits, SBI is the highest and ICICI Bank is the lowest, which HDFC in between. Debit card transaction, credit card transaction. Credit card, I think HDFC would be the leader because it does a great set of cards. Probably want to add ICICI Bank and see where it is. Very much at par at SBI cards, but I don't know why IDBI is even present here. But HDFC Bank is really doing good. Bank deposit debit cards transaction, I think the SBI is doing good because very large bank in terms of fund, basically just penetration in the country. So using some of these matrices, you can try and understand which bank is doing good. For example, if you think about the fact that ICICI Bank is doing good in terms of market share of internet banking, you have to understand that their tech is good, right? That's the inherent cause that you could think about. And then we'll move on to some more operational metrics. For example, let's look at some different. So the sector in general is doing good, is great. UPI transactions, if you see, just soared over to 2020. Credit card transactions also on a high rise. Banking transaction, debit card transactions are more or less pretty flat. They haven't moved significantly high. There was a dip, but I think it's just till that 300,000 crore mark, which it is just touching around. But then the credit card transactions are really increasing after 2022, or actually after COVID, it's really hitting a good number. Bank advances, deposits, they are not growing at that rate compared to the card transactions. Wallet transaction amount is doing simple, and I think internet banking is also like kind of a consistent metric. So what is important to understand from this analysis is credit card transactions are on the rise, A, which I can understand from these operational matrices. We'll come to company later, but we also looked at credit card transaction market share and understood that HDFC Bank is doing good. So there can be a good inference done, which is HDFC Bank, since it serves the probably the largest chunk of credit cards in the company running in the country, close to 25%, would be capturing a good segment of it. There's also, you could do company-wise analysis like CASA versus liability. I am not 100% sure what CASA ratio is. Let's just see. Okay, current and saving account ratio. All right, so I think that's almost on a decline for some of them. Current liabilities, cross NPA. We should look at proper banks, not this. So I'll want to do HDFC Bank, SBI, ICICI Bank, and then the gross NPA can be looked at. It's for the banks, it's less than 2-3%, which should be some sort of an industry standard. Then there are other margins as well, like credit to risk asset ratios, etc., which I don't fundamentally understand, but if you are from the sector, you would. This one is another interesting, which is important to see how the sector is performing and going up. So if you see anything in general, for example, I was looking at it. So personal loans is a category which, if you see between 2017 and somewhere around 2021, was not growing at that rate. I mean, there's a constant incline, but it was more of a flat. But around this period, there was a little dullness, but it has grown significantly at a faster rate after 2022. So it is close to doubling in the 2-3 years, but before it took us like 4-5 years. So that's very interesting data that people are taking more loans, and fundamentally, if you tie this with the data that credit cards are high, which is also a kind of loan, and these are personal loans, which are kind of liabilities. Deployment of bank credit is another parameter which we can look at. Industry type, different industry type where the bank credit is going. Other is the highest, but then government would have also spent, so the spend would include government. But if you see, another interesting metric is deployment of bank credit, personal loan types, where the credit has gone essentially. So real estate sector is really there, residential real estate, and then you have other smaller categories like other personal loans, vehicle loans, FD based loans, education, credit card, outstanding payment is also, I think, interestingly, a number which we should study separately. So if you see, the loans people are taking or the outstanding credit loans is also becoming. So if I wanted to do some sort of an industry analysis and get to a level of building a narrative about banking industry and seeing where are we headed. So credit cards are going high, personal loans are high, credit card outstanding is also increasing at a very rapid rate. So these are not great signs from a consumer perspective, but if you think from a banking perspective, this is how they are making money. So all in all, the banking sector seems to be doing pretty well. Similar kind of analysis can be done in pharma, this excluding LIC. I would want to come back to this, some kind of seasonality, which I realized in this industry. So again, I have not done any stock analysis with respect to this. If a certain industry stock prices surge during this time, but if you see, there's a very clear surge during COVID, which is all of these peaks, if you see historically, have been March. This was a dip, but here was March was something in there still in 2020. 2021 again a high rise, and 2022 was significantly good. But since then, the insurance renewables have been under decline. Probably the newer acquisitions might not have been this good. So my intent around using this app is fundamentally this, is to be able to study the industries, look at some charts and make some hypothesis around them, and see how that industry and segment is growing. There is a potential upside to tying this back with stock data, but I have not done that so far. All right, so this was a different kind of a video which I was trying to do an analysis. If you have liked this, put in comment that this was interesting and you will want to see more. If you have disliked it, please feel free to comment it down. Irrespective, please do subscribe. Bye bye.